Well, the premise that I had when I was discussing oil futures was that there's something very specific that I don't like about the price action in the oil market. And that is that it really sort of seems immune to news that would be bullish for oil. And oil's tricky in the sense that what's good for oil is often bad for the rest of the world and vice versa. Um, but case in point, um, traders are always cognizant of what the big black swans in their marketplace would be. One of them was always some disruption to the crude supply coming out of the Persian Gulf. Well, the sort of the biggest black swan of them all was when the Saudi refineries were attacked and really really did a number to their ability to produce and distribute oil. And yet there was a big spike, but not a monstrous spike. Yes, I think it ticked over 70 in the overnight session, but realistically, we got from the low 50s to the mid 60s, and then pretty much spent the next couple of days drifting lower from there. Part of that was because it turns out that a lot of the market's worst fears weren't realized, but also the enthusiasm among oil traders seemed to ebb very quickly. Same thing happened when an Iranian tanker got attacked. There was a brief blip, and we sold off shortly after. Oil, remember, is a global commodity. It is very much dependent on economics. One would have thought that it would have a bigger response as the U.S.-China trade talks seem to be going well. And there was a bit of a bullish bump, but that faded very quickly in Monday's session. So what I think we're seeing is a series of lower highs, but a very stable support level, sort of let's call it 50, somewhere between 50 and 52. I'm going to pretty much call it 51-ish for a firm level. And the one exception to the series of lower highs was literally, what one would consider a black swan. And by the way, a lot of that spike, as it turns out in hindsight, somebody took a huge loss. And the question is whether that was a rogue trader or not. There was some debate in the press about whether he was within his limits and just traded badly, but there was some forced covering based on that. I'm not going to get too into that because I really don't know the specifics that go on inside of another firm, and it wouldn't be fair for me to speculate. But we do know that that was probably a certain amount of forced covering that came on the back of that. And so when you're seeing this pattern of lower highs and a support level that has held multiple times, generally it's good when a support level holds multiple times. It means it's strong. But if each subsequent bounce seems to have less and less ability to drive the price higher, eventually that support comes under attack, and oftentimes that support level fails. And that would be the thing I would keep an eye on here if you're trading crude, or actually everybody should always be keeping an eye on crude because it is it's a component to the whole economy, and that's always something to be a concern. You should always have that and a few other selected futures on your screen if you're an active market trader. Copper is always a good one. Heating oil is important. Of course, the fixed income futures are crucially important. That's a little insight to how I look at the markets on a daily basis. But that would be my concern. And what it means is if the price of crude oil starts to come under attack a little bit, attack's probably the wrong word, if it starts to come under some pressure, that doesn't necessarily bode well for domestic producers and domestic oil stocks or even global oil stocks. All that, again, it's a global commodity. And so keep an eye on that one. One positive could be if the dollar starts to weaken a little bit. That usually bodes well for the price of commodities in dollars, right? Because a weaker dollar buys you less barrels of oil, et cetera. But in general, I feel that the trend has been moving away from bullishness in oil and is really coming to a fairly crucial level here in the low 50s range. And you really should keep an eye on that one.